Bloomberg says investors are going big on Taiwan's exchange-traded funds, or ETFs, putting over $19 billion in them so far this year, the most in Asia. Taiwan's ETFs drew more money than those in South Korea and China combined, coming in at $9.4 and $7.9 billion respectively. Taiwan-listed equity ETFs have long been popular with local investors. Experts say strong inflows are likely to continue, driven by demand from retail investors and a strong local currency. And for more on Taiwan's ETF inflows, Alec MacDonald spoke to Lee Torng-her, economics professor at National Donghua University.
How sustainable is this boom in Taiwan's ETF market?
I guess it is quite sustainable, first of all, in Taiwan's either stock markets or whatever the investment markets for investors pretty much dominated by retail investors, okay? And so one thing is that because for the last couple of years, we have this quite low interest rate environments, right? So retail investors are always looking for a high yield. So of course they don't want to face more, significant risk. So ETF is a kind of the investment vehicle can strike the balance between the risk and return. And the second thing is, I think last year or 2 years ago, the government actually started to push for this what we call the Taiwan individual savings account. Okay, so of course in this case, the government actually offers some sort of incentive for individual investor or retail investor to put their money into this TISA. I think maybe another one could be the suddenly the appreciation of Taiwan dollar, right? So, and this is actually to make retail investor realize, okay, there are greater risk in investing in this foreign currency denominated investment vehicle.
Aside from the retail investors, what other advantages and benefits does this bring to the Taiwanese economy?
So this semiconductor industry, I guess they will still be a major driving force for Taiwan's economy, right? So we could see a lot of this ETF actually kind of like tracking this semiconductor industry's performance. Okay, so I guess this is probably one of the advantage of for this ETF in Taiwan, and because lots of particularly for those equity ETF, okay, and they track a lot of these semiconductor industries stocks. So, and of course, other countries are trying to catch up with Taiwan's semiconductors industry, right? But it's gonna take I won't say a while, but probably maybe a decade or 2 decades, who knows?
So on the other side, what sort of risk does this open Taiwan's economy to?
ETF, I think ETF basically track the pool of investment vehicle, right? Particularly for the equity ETF, they track those stocks, right? So one thing is that if the economy actually sort of like is going down, and then all the stock market will go down with the economy, right? So of course, in this case, then the ETF you are buying or you're investing definitely will suffer from this. So basically, they are going along with the economy. Okay, so this is the one thing for the risk for these investing in this ETF. Another one is because there are various ETFs, right? So some ETF may not track whatever the underlying pools of assets very closely. So maybe there was some tracking error, so which probably will not give you whatever the return you wanted, okay? So this is what I call the tracking error risk. Okay? All right, I think that these are the two major risks, okay, the retail investor is going to face.
That was Lee Torng-her, economics professor at National Donghua University in Taiwan.